And we're taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist over at Standard Bank. Good morning, Nomvuyo, and thanks so much for joining us. So what coordinated action and intervention really means for the currency market? Let's put that on the table because speaking to traders at the desk this morning, they're saying still lots of nervousness and apprehension about.
Morning, Alishia. Yes, you're absolutely right. The volatility is unlikely to diminish as a result of central bank action, but we've already seen quite a sharp reaction from currency markets. Following the announcement, the rand just dropped straight down to below the 820 level from where it had been trading previously and is now currently sitting in around 810. And we see that this strength is likely to be maintained in the short term. So, of course, I think what really happened yesterday is that this move boosted optimism. Seems to have eased funding for banks as far as dollar funding is concerned. And with all these concerns over the global economy and liquidity, those concerns appear to have been temporarily abated by this move. So everything is kind of riding the wave of the optimism. But of course, the question of sustainability is probably what's forefront in most people's minds.
Exactly. I mean, we've had the euro, yes, hitting that 1 week high of 135. We've got it now trading at about the 134 level and holding pretty steady this morning. Commodity currencies staying sharply higher as well, but all hinging on what plays out over in Europe and then hinging on the euro's direction as well. And many saying that the euro's upside could be capped by speculation that the ECB will cut rates aggressively at its December the 8th policy meeting and perhaps venture into more bond buying as well. What's your outlook on that front?
Well, as far as the outlook for the ECB in Europe is concerned, I mean, we've been saying for some time that we see that economy sliding into recession sometime soon. So we are of the view that the ECB should cut rates. I'm not sure that they have room to cut rates aggressively given where the refi rate is already. But certainly they should be in a position to provide additional monetary accommodation. And our view is certainly that they should go ahead and do that given the risks that we see to growth in the region.
While you've got that potentially weighing on the one hand, you've got to consider the fact that we've got China on the other hand giving commodity currencies like the rand a further boost yesterday, and that with the announcement of an easing of its policy. What did you make of that news and the kind of impact it's going to have, bearing in mind that we had PMI data come through this morning, not too encouraging, factory activity shrinking in the face of softening demand and hitting 32-month lows?
Well, I think the fact that there hasn't been a pronounced reaction to this morning's PMI data out of China, which, as you mentioned, was quite disappointing. So I think the fact that there hasn't been a reaction stems largely from the fact that the People's Bank of China did take action yesterday. So they lowered reserve requirements. That is going to be effective from December 5th. And a few weeks ago, they also eased monetary policy, but that was more for the rural banks. So certainly there does seem to be some cognizance at high levels that that economy does need some support, that the threat that emanates from Europe and from the general slowdown in the global economy is something that needs to be managed. And you're saying monetary authorities react appropriately in that regard. And one of the offshoots, as you mentioned, has been that commodity currencies such as the rand have received a boost from that.
Yeah. What kind of trading range do you have pegged out, towards as we wrap this week up, Nomvuyo?
Well, we still see further strength in the currency. So if it breaks 8 rand, then possibly a move down to 790. But of course, that is also going to be dependent on global developments. And with South Africa's PMI out also later today, that could provide some direction for the currency as well.
Let's take a look at your forecast in that regard. As you say, that PMI number being anticipated, what are you looking for?
We're slightly more pessimistic than the market. I think market consensus estimate is for 49.9 points, but we're calling for 48. We see the manufacturing sector still under a lot of pressure, and we don't think that it's going to be recovering anytime soon when looking at the PMIs of South Africa's global trading partners, as well as just internal demand dynamics.
What about the investor confidence index? We've got Maxim ETM out with that index and its results this afternoon. Just how much attention do you pay to something like that?
Again, I think it's going to be dependent on what other news is out there, but I do think the focus for today is going to be on all of the manufacturing PMIs that come out. I think that those are going to take precedence given the concerns that we're seeing over the global growth outlook.